Okay, let's get started. Dave, we're going to start with hotels. I think we're lucky to have Dave Johnson because he kind of gives largest hotel management company in the country. Dave, just give us a background on the company and kind of what you're seeing and what you think's coming, and then we'll open it up to questions.
Sure, Bill. Thanks. Good morning to everybody, and thanks for having me. Bill, a great intro. You know, Aimbridge, we started it about 17 years ago, a little over 17 years ago, and appreciate the shout out to Harlan Crow. Harlan actually bankrolled me to start the company out of his not his fund, but his family office. So I had been a Trammell Grow guy prior to that. Fortunately here in Dallas. But we've grown to about 1,400 hotels that we operate in approximately 20 countries, primarily United States, about 1,000 of our 1,400. We currently operate up and down the scale chain, everything from luxury hotels and resorts like the Windsor Court in New Orleans or the Carneros Inn in Napa, 5-star properties. We also operate full service hotels. That's kind of our bread and butter, Marriott's, Hilton's, Hyatt's, Westin's, et cetera. We operate also in the premium select service, and extended stay, courtyards, residence inns, Hilton Garden Inns. We also have a pretty thriving resort business that's both onshore and offshore. We've got quite a few dots on the map in the Caribbean. So we do all inclusive and inclusive. In addition to that, we own a company out in Southern California called Evolution Hospitality. We really specialize in, boutique, lifestyle, independent hotels, and we own our own digital marketing agency. Right now, to Bill's point, we're the largest by a factor of about 7. And in this crisis right now, we're finding out that scale really matters. There's lots of third-party management companies, but in our world, people don't necessarily understand that there's really 3 prongs of the stool. There's the hotel owner, there's the hotel operator, such as Aimbridge, and then there's the hotel brand. A lot of consumers think that if it shows a Marriott flag, that Marriott owns it and runs it. That might have been true 35, 40 years ago, but right now, majority of hotels are franchised to a third-party operator like ourselves. What we're seeing is obviously it was an extreme crisis. I've led a company through 9/11, led a company through the Great Recession, and they're nothing close to what we're experiencing now. We closed of our 1,400 hotels. We probably closed about 275 at peak. We since have opened about 40 or 50 additional hotels. And when you look at the facets of demand for us, it's really 3 pockets of demand. You've got your leisure customer, you've got the business traveler, and you've got group and convention business. In that order, we're seeing the recovery right now. We're starting to see recoveries. It obviously varies by state and locale. And actually, Texas is leading the way down on the coast. We've got about 7 assets that are in Corpus, in Corpus, Galveston, and South Padre. The last 3 weeks, we've sold out the hotels on Friday and Saturday night, not necessarily during the week, but really excited about that. The biggest difficulty to social distancing is the elevator. So we're just having somebody monitor that elevator. But once the governor here in Texas lifted the restrictions, we're seeing really increased occupancy. I think people just wanted to get out of their house. They feel comfortable about social distancing on a beach. We removed half the pool furniture so people can social distance there. Seeing some pockets in Atlanta, but really any drive-to leisure market, places like we operate in Sedona, Colorado. We still haven't opened Napa. There's a lot of pent-up demand, but I don't think California wants the economy to reopen out there for a lot of reasons. But we're doing well. Technically, legally, we're not supposed to house anybody in a California hotel. We operate over 90 hotels in California, so it's a big market for us, unless it's COVID related. It's a little bit frustrating from that perspective. Places like Myrtle Beach, South Florida, the Panhandle of Florida, we're seeing leisure come back really quicker than we thought. Some stats that are encouraging, but it's a catch-22 is we've had 7 consecutive weeks of increasing occupancies. But when we started at a base of single-digit occupancies when we're used to 70s and 80s, now we've basically gotten to about a 30% occupancy rate in our hotels across the country. So it's one of those you're encouraged because you've had 7 consecutive weeks, but obviously still we've got a big hole to climb out of. I would say that Ray Hunt once said, if in a crisis, if you're only playing defense, you're missing a great opportunity. I've always cherished that line, and so we're in a position right now. We've got great partners in Advent International out of Boston. They've got about 80 billion AUM. They're our largest partner and shareholder. they're in a position to be able to play offense along with us. We've got a strong balance sheet. So we continue to play defense because, there's so many prognosticators when we're going to get back to 2019 levels in our space. And I would tell you that you can find everything from 2021 to 2025. I think it's probably somewhere in the middle. And the wild card this time around is science. If we do find a vaccine, I think people get back to Vegas and Disney and basketball games and football games very quickly. And they get comfortable getting on airplanes and whatnot. But until we have some type of therapeutic, better data, more recoveries, or God willing, a vaccine, I think we get to a place where it's really well. But right now, business travel and any type of group or meetings travel is really little to none. It's only the tertiary markets where it's lower end drive to, extended stay America of the brands is still running occupancies in the 60s, but it's a lot of truck drivers, transportation workers, et cetera, that move across the country. But anything, city center, high end, you're still running. We operate the Statler downtown Dallas. We've got a lot of healthcare workers. We're actually we extended a $30 rate to just be, originally we gave free rooms and now it's $30. So we're still running occupancies in the 70s, but obviously not making very much money because of the low rate, but feel good about what we're doing. So, I think as Texas continues to open, we'll do well, but anything big, city center, group oriented, it's just going to be very, very difficult. So with that, Bill, I'll turn it over to you.
Anybody from the group have any questions of Dave?
Dave, Dave, when do you see large groups? I mean, you think it's going to be 2023, 2024 on the groups? Because so many are getting canceled for this year. But
yeah, Ray, the good news is a great question. The good news is everybody that's canceling is, I'd say probably 85% of our customers are not necessarily canceling, they're postponing. So if they had something in the third quarter, they're trying to push it to the fourth quarter. They had something in the fourth quarter and they're nervous, they're pushing it to the first quarter. And then, you're going to see, it's going to be interesting to watch because Vegas opens Friday, so they're reopening with social distancing. So I'm really wanting to see what happens in Vegas. And then both Disney and Universal are going to start opening their parks. So I think it's going to be interesting to see what happens there. But as it relates to, I think a lot of it's going to have to do with large Fortune 500 corporations are going to say, how much risk do we want to take telling our folks it's okay? Because I can tell you there's a lot of business travelers that work for Fortune 100 companies. They want to get on a plane now, but their company's holding them back. They want to hold meetings now. And it's ironic. I don't know about you guys. I'm so sick of Zoom and conference calls. I want to yak. I come in every day and all I do is sit in front of my computer. And it's nothing beats face-to-face communication. And I would say, Ray, I think you'll start with small meetings, and I think it'll be in secondary cities, smaller meetings, et cetera. But the big 5,000 people convention in Vegas, we're a ways off on that. So it's going to be interesting to watch. I think that we're going to have a lot of carnage in our space. I've got equity calling me that is not traditional equity. They're real estate equity, but traditionally have not invested in hospitality, and they're pushing family offices and PE funds that are starting to push a lot of money that want to take advantage of this. And honestly, everybody got about a 90-day hall pass here with the CARES Act and the PPP loans. A lot of these smaller owners that aren't well capitalized, and their lenders have given them, if it's not CMBS, their lenders have given them a little bit of a holiday on forbearance, et cetera. But what we're seeing right now is the CMBS market, which is a large lender to the hospitality business. It's just blowing up, absolutely blowing up. I talked to a lot of the debt funds out there. They're sitting on billions of dollars of hotel loans. They're going to start, I think, third and then fourth quarter, they're going to start picking winners and losers. And I think you're going to see some real opportunity. But back to your specific question, the only wild card I would tell you, Ray, is science. If we start to get some of the science, there's 110 vaccines under trials right now. Gates is the largest contributor to vaccines. And I read a really an op-ed from him last week that said he said normally it's 5 years to find a vaccine. The CDC, the FDA, big pharma, and researchers came together and said 18-month timeline that started ticking in January of this year. He was pessimistic they could hit that 3 months ago. Now he's saying that he's optimistic that we'll beat that 18-month deadline. And some of the same scientists back then, 90 days ago, now are saying, with what we've done, there's 10 or 12 that are highly encouraging. So if we were, God willing, to get something in, by the end of the year or first quarter next year, I think that really encourages a lot of folks to just got to get back to business as usual. All this malarkey about, people aren't going to travel again. We're going to start officing from home. It's the same thing they said after 9/11. They said they said New York will never be the same. It'll be a shell of what it used to be. And the reality is that nothing beats face-to-face communication and interaction. We're human beings. I think we thrive for it. But the reality, everybody needs to feel safe too.
Dave, is most of the stress in high end or low end, or is it all across the board?
It's gonna be all across the board. Bill, we're raising hundreds of millions of dollars to go after it. It's a little too early yet. I think it'll start with the junk, the smaller stuff that's really financed in CMBS, because those sponsors, they don't have the wherewithal to hang. And I think they've seen this PPP 90-day, kind of lifeline, but they looked at it as, will we snap back in the third or fourth quarter? So it's going to get me, and I don't think anybody believes there's going to be any kind of snapback. The only snapback that I would see as a hockey stick is if we find a vaccine. Then I think once everybody gets vaccinated, they're like, hey, I can't wait to go on vacation. Now, do I think they're going to jump on a plane and go to Europe? No. I think they're going to go to the Caribbean and Hawaii and California and Florida, Colorado, those types of places. But also business travel, I think, will rebound dramatically if there's a vaccine. Companies will feel comfortable putting people back to work, but that's a big if. But to the opportunity, Bill, it usually starts with the smaller, lower end stuff because it's not well capitalized and they over levered it in the first place. But there's a special servicers, and again, we're so reliant on CMBS debt. They told me that the number of calls in January, February, averaged about 5 a week looking for relief. And in March, April, and May, they're fielding over 200 calls a week. And hospitality CMBS debt in the United States right now, it's about $5 billion. And they're expecting at least 75% of those to be in trouble.
Hey, a number of us have projects on the drawing board to start fourth quarter or first part of next year for hotels. What are you hearing about just overall development? Not things that are already started, but starting. Is everyone just shelving stuff for now, or are people still pushing ahead?
I think it's a good question, Ray. I think it depends on the asset type, and location. If you're building a big city center hotel, I'd shelve it. For example, we're actually in the GP and the LP. We bought the Rio in Vegas. We closed on it December of last year, 2,500 rooms, over $500 million. We, a lot of times it's better to be lucky than good because we didn't want the World Series of Poker. And so we, they had an agreement. So Caesars leased it back from us for 2 years. And so we're clipping a $45 million a year rent payment now in 2020 and 21 with an option on 22. So, it's like we're playing with the house's money per se, but everything else in Vegas is shut down. So if I was about ready to break ground on a 1,000-room convention hotel, I'd probably slow play it. We have a resort, Frenchman's Reef, with a public REIT, Diamond Rock, in the Caribbean. It's going to take them about $150 million to finish it because it got hit hard by the hurricane, but it's going to be one of the most iconic resorts in St. Thomas in the Caribbean. I mean, really in the Caribbean. Beautiful asset. And they are obviously preserving liquidity. They don't want to, they just basically want to shut down the construction. And I told them, leisure is going to come back the fastest. So we actually married them to a family office. It's giving them kind of a pref loan. And, because they're a public REIT, they actually would like to buy them out. They just are kind of looking to preserve liquidity. So we've exchanged term sheets. It's a good friend of mine on the family office side, and the CEO of Diamond Rock's a good guy. So, but if it's something that's already financed, Ray, and it's under construction and broken ground, or if it's something that I would say is more, select service type asset, extended stay, and bottom line is with developers, if it's been financed, they want to go through with it because developers want to get paid. No shot at you there, Bill.
You're right about that. Any other questions of Dave? Dave, I really appreciate you getting on the call, man. I mean, you're welcome to stick around and listen. I know you're a busy man, but I really appreciate it.
You bet. And good morning to you, Lucy.